Foreign investors sold Indian markets for months. Every rally was sold into, but suddenly they are buying again. What changed? How do we know if this buying will last? Because foreign money doesn't move randomly, it exits on risk and returns on clarity. It is the end. Understand how big capital really. Foreign investors didn't sell India because India was weak. They sold because the global risk increased. Rising interest rate, strong dollar, global uncertainty, and geopolitical tension forced the capital to move defensively. This wasn't an India problem, it was a global positioning problem. Now, many people ask, if India was cheap, why didn't the FIs buy? Because FIs don't buy cheap markets, they buy predictable markets. When the uncertainty is high, when cheap markets feel risky, prices don't attract capital. Their outcomes do. Now, look at the last 24 to 48 hours. Here, US traded clarity. US markets moving higher, used policy uncertainty. This doesn't solve everything, but it proves the visibility. And visibility is the first condition for foreign money to return. Foreign money never rushes in. It test first. Small allocations, large liquid stock, index heavy names. This is not conviction yet. This is the re-entry behavior. Real reversals show three signs. First, buying across multiple sessions. Second, participation beyond just one sector. Third, stable currency behavior. One day of buying, nothing. Patterns mean everything. Foreign investors need liquidity. Large caps absorb the capital without distortion. That's why initial buying always shows up in index heavyweights, ban, and large exporters. Broader markets follow later, only after the confidence stabilizes. Foreign flows are still conditional. They depend on the global interest rates, dollar strength, execution of trade commitment, and global risk appetite. So this is not a straight line, it's a conditional recovery. Retail investors stop copying the FIs blindly. Flows explain the context, not the timing. The goal is not to chase the foreign money, it is to understand when risk is reduced. Foreign investors didn't return because they changed overnight. They returned because the risk patient changed.